I also bring in Ritesh Ashar at this point to give his reading of the markets to us. He is, of course, Chief Strategy Officer at KIFS Trade Capital. Ritesh, good to have you as always. Range bound for the second straight day, but markets have seen some kind of a pullback in the last 6 sessions. You've recovered about 200, 250 odd points on the index level as well. Do you think that pullback move is now done and we should be preparing for a move downwards from here? Or do you feel that possibly there are fundamentals at play, especially with earnings now around the corner, that you could see this move sustaining?
See, right now the market is which is moving towards 10,000 to 10,500 range-bound movement, and there are a lot of external factors as well as internal factors are affecting towards the market. The first factor is crude oil prices increasing. Secondly, the trade war between US and China, and all of a sudden now the Russia is also coming into the picture. So geopolitical issues is also going on. So there are a lot of fundamental external and internal factors are affecting the market to getting a direction. But as you are rightly said, the earnings season have been started, so the market eye is purely focusing on the good earning numbers, and I personally feel instead of looking at the index numbers, I think stock specific movement in the market have seen in last 5 to 6 trading sessions.
All right. In fact, Ritesh, you talked about crude prices, and that's really what's informing the sort of moves we're seeing in quite a few spaces in the market. OMCs in particular, we saw this possibly bad news reports of the government may ask OMCs to absorb a 1 rupee per litre price hike. Definitely will hit their margins, might hit their volumes as well. Any view that you have on OMCs, because they've been under pressure for quite a while, and especially after today's news, they're all down across the board about 6 or 7% each. So what would be the strategy as far as
See, right now the stock, the way it has fallen down drastically, it is all about impulsive reaction, or you can say in such a way that it is just like a sentimental issues, because nothing has given a clarity as of now from the government so far. And if government has coming out with such kind of decision while looking at the micro and macro level economy, I could say it will be the right decision, because the way the crude oil price has shoot up, it will be and if it will be passed back to the consumer, then the inflation is going to get impacted a lot. So looking at the inflation numbers and the overall microeconomic factor, I think if it will be not to pass back to the customers will be the right decision by the government.
All right, but would you be betting on any of these OMCs? I mean, because 2 days ago, the news, or rather the discussion point around OMCs was that at least the marketing level margins or the fuel pump margins have remained strong, and that will reflect in Q4 numbers as well. I think there was a Morgan Stanley report also that came out with a positive view. But clearly that sentiment has changed with the news that came in today.
See, definitely, if you look at the fundamentals of the companies of this sector, the performance is fantastic over a period of time. Yes, whatever the cost, oversold cost will be impacted, it will be marginally impacted to the profit margin. As I rightly said, right now it is a sentimental impact, and because of that the stock has fallen down. But I personally feel overall fundamental of the companies are good, stocks are good. Any deeper level, it will be treated as a buying opportunity in this counter.
Ritesh, what about you? I mean, we spoke about OMCs, but what about something like a Reliance at the moment? Good times with crude prices rising?
See, if you'll ask, the Reliance is now becoming diversified. It is not only depending upon the crude factor, or not only become an oil and gas company. Now the Geo numbers has also started projecting a good numbers the way they have projected 1 year back. So numbers are also improving. So overall, if you'll consider as an KT, the fundamental of the Reliance are really good. And I personally feel the Q4 result are also expected much better. So looking at the fundamentals of this company, I still prefer to go ahead with an Reliance.
Well, Ritesh, what's the view that you have on IT? We're waiting for some of the large cap names to come out with their results for the fourth quarter. But do you prefer large caps or do you prefer mid caps? Any names that you have for us?
As Dipanshu rightly said, the IT sector is going to be a biggest mover in the street, not for time being, but it is continue for the 2018. 2018, the IT is one of the big contributor in the stock market. Forget about the large cap counter, but compared to the large cap counter, the way the stock has performed, I personally feel the mid cap IT stock will give much better return compared to the large cap. If internally, if I start comparing amongst the performance of large cap versus mid cap, the stock specific, if you ask me, related to FSL, which I wanted to bet on. If you see the profit after tax, it is year on year basis, it is start improving. quarter on quarter basis, it has started improving. If you compare with quarter 3, it was 51%. Quarter 3 result has grown by almost 51%. Secondly, compared to December and this quarter, I'm expecting the results should come much better than quarter 3 compared with quarter 4. So good finance and the order book also in hand. Same ways, if you look at 8K Miles, it is a cloud-based system which is having the monopoly in the industry. 30% of the market shares they have right now. Year-on-year basis, their profit margin has also, compared to PE, their profit margin has also increased by almost 22%. Secondly, the order book value, they are not only in India, but they are also doing in US and Europe. So they have diversified product. The cloud-based product, it is a demand for a long-term perspective. So nowadays, the cloud-based product and the cloud-based services and the server will be shifting towards in such a way which will be the demand-based product, and the margin of this company is going to be increased on year basis. So my bet is not for short-term on this counter, but it is a long-term perspective. You will not surprise if it will be double return from the current market price.
Ritesh, let's talk about the consumption theme, because as we're standing by for fourth quarter results, that's really something that we're expecting will show good results this time. Of course, we've seen a lot of disruption in this space recently. Third quarter was strong, fourth quarter as well. Hopefully, will come out, quite strong. What are you liking in this space? Any specific stocks that you're betting on?
See, basically, when on a fundamental perspective, when we're deciding a sector and the stock, on the technical aspect also we'll give some weightage. If you look at the relative rotation graph, that is RRG, wherein in this particular graph on the technical aspect, when we look at the FMCG counter is looking into quite positive for a shorter term. But if we are looking at into overall aspect of the FMCG counter, I personally bet on ITC and LT Food. Why precisely ITC? The reason behind is ITC is not only doing a shop to the cigarette business, but they are diversifying, finding to a lot of other products. So company has announced 10,000 crore investment on the diversification. At this time, their company is also coming up with 25,000 investment in terms of diversification of the products and services, plus innovation in terms of coming up with a new product in terms of consumer acceptable prices. Because after the GST revision of the price raise, that benefit has been given to the end consumer. That is an overall objective of this organization. Same ways, in a small company, it will look into the LT Food. If you look at this company, it is all about they are doing a basmati rice. If you are looking at the fundamental of this company, it is all about manufacturing of the branded and non-branded product, not only in US but also in Europe and other countries. And this company is diversified in such a way wherein within the India and outside the India, they are doing a branded and non-branded products of the basmati rice. And looking at the profit margin also, it is increasing from 30% to 37%. And I personally feel the way the company is having a monopoly of their product, these stocks are going to be outperformed from the current market price. I think it's running at around 94, 97. It's a range bound between 85 also to 97. But the way the company has projected for the 1 year of plan, I could bet on 120 and 130 easily in 12 months of time.